All right. And we're live again tonight. Big conversation. We are going to be talking all things hidden costs of home ownership in 2026. Excited for tonight's conversation. Again, as usual, if you're here, let me know where you're watching from, and let me know what questions you have. Stay engaged. I'd love to hear from you. And I think it's going to be an interesting conversation tonight. Have hidden costs changed from 2025 that much? Maybe. I mean, they've gone up in a lot of ways, probably just because everything's more expensive, but I think it's going to be a really interesting conversation. I know I took some notes. I also, not only was I looking up, as I always do preparing for this, I was thinking back a little bit on our experience with homeownership and what that looks like and the hidden costs for us. And I actually found some things that were pretty revealing. So definitely stay on this. As usual, if you have questions, the contact info for us is below. So should you feel like, hey, I have questions about buying, selling, renting, or investing here in Myrtle Beach, reach out. We would love to help you. That's what we're here for. And what you're going to hear, me talk about tonight is going to be information that may not be what you were expecting. I'm not here to sell everybody on homeownership, although I do believe in homeownership and the wealth building capabilities. Right now, I think in today's environment, online, you hear a lot of noise, and it's everybody's an expert and everybody wants to talk about why you should own a home or why you shouldn't own a home and actually you should rent. Now, I don't want to get too far off track here, but one of the topics I was thinking about is if we're going to do the hidden costs of home ownership, then I think the next video may have to be the benefits of home ownership, because I think there's two sides and it really depends on how you look at it. So I'm really interested to have that conversation. But the reason why we're doing this tonight is because I really believe that everybody should go into this decision eyes wide open. And you're going to make potentially one of the largest financial decisions you've ever made in your life. And I believe that you should do it with all the information. I'm going to give you the good and the bad. And I don't want this to sound like tonight that I'm just beating up on home ownership, because I'm not, because I do believe in it. But I also believe it's not for everybody. May not be for everybody. And it also may not be the right time for some people. And so what are we going to talk about? We're going to talk about what the hidden costs are, right? We're going to talk about the real cost of owning a home in 2026 beyond just the mortgage payments, because that's where I think a lot of individuals go wrong. They only focus on the mortgage payments. If they focus on that, a lot of times, I made some notes here. I thought it was kind of interesting. Buyers obsess over price and rate. And I'm not saying those aren't important, but there are so many other factors to consider. And that is what we're going to, get into a little bit tonight. But most people think that if they can get a mortgage that they're set, and that's just where it begins. The truth is owning is where the real costs show up. And I think it's really interesting what we're going to talk about tonight. I'm going to break down some of the major hidden costs, why they've risen, how they hit you monthly, what you've got to plan for. I'm a business coach as well. And when I coach real estate agents, mostly, we talk about having a business plan, right? And that's no different if you're going to buy a home. Should you have a plan? Yes. Would you be more successful if you had a plan versus if you didn't? Yes. Have you mapped out all the costs? Have you talked to everyone you should talk to and understood exactly what costs are going to be? And one of the biggest discussion points I think tonight might be that you need to have a reserve, money in your account, because we all know that unexpected surprises, good and bad, come up in life. And that's no different when you own a home. Some of my stories here are all about, in fact, most of the stories here that I have are about things that happen that we could have never foreseen. You can't plan for that. And we'll get into that as well. So feel free tonight to ask questions as usual. This is important stuff, and I want to be able to answer it for you. So without any further ado, let's get into it And I'm excited to have this conversation. So, hidden costs. What are we talking about? Hidden costs, expenses for homeowners that don't always account for when we're budgeting, right? We don't always think about well, what if I have a water leak in my home? Or what am I not budgeting for that could hit me? A rise in propane is an example that we just, went through. You have a rise in propane. So filling your propane tank, which is a big deal here in Myrtle Beach. A lot of people have propane, right? Or the cost of electricity goes up, or peak hours, which we have here in Myrtle Beach. Peak hours, if you use your electricity between this time and this time, you get charged more. And that's because of a lot of things that are going on here in Myrtle Beach with growth, and we've got to be prepared for an infrastructure, but that's taking place. So you have to be prepared for those things to happen. Insurance goes up. Anything that you have could go up. And so you want to be prepared for that. These are not your mortgage, principal, and interest. They're additional when we talk about hidden costs. So you're going to plan on, your mortgage, you're going to plan on interest and principal, but you may not be thinking about HOA, assessments, which was on my list of things to talk about tonight. We have investment properties. If you buy a second property here in Myrtle Beach, or anywhere for that fact of the matter, some of this is not just Myrtle Beach, it's everywhere, but some is also just Myrtle Beach. If you're going to buy a property, you have to be prepared for, oh my gosh, my property is in this big condo building and there's going to be an assessment because we need new elevators. And everybody that owns a unit has to chip in. Okay, that's how it kind of works. So let's talk about some key categories that we might run into tonight. So maintenance and repairs, home insurance, right? We all have to have, home insurance, property taxes, utilities and HOA fees, unexpected emergencies, which is a large portion of actually what takes place, and then opportunity costs. And what do I mean by opportunity costs? I threw this in here because this is about the interest on capital that's tied up. If you have money deployed in your home, so let's say that somebody owns a home, the home is worth $500,000 and they owe $200,000. You have $300,000 in potential equity in your home. That money's tied up. You can't earn money on that. Well, it's tough to earn money on that money when it's sitting in your home. And so that is an opportunity cost, right? So we're going to talk about those things. And then I've got some current national statistics that I want to talk about as well. So let's kind of get into it. Let's start with the national statistics. So according to recent analysis, the average U.S. homeowner pays about just under $16,000 yearly in hidden costs. So let me just repeat that. According to recent analysis, the average U.S. homeowner pays about $16,000. It's $15,979 to be exact, yearly in hidden cost. That's about $1,300 a month beyond mortgage payments. That includes maintenance, property tax, and insurance. Okay. I think that was actually according to, I hate to say it, Zillow. That was a report from Zillow. But maintenance, they had it $10,946 annually. Homeowners insurance at about $2,000 annually. Property taxes at $3,000 annually. And that doesn't include utilities, HOA dues, or upgrades. So these are costs that you need to think about before you go and you purchase a property, right? We need to think about these things because what we don't want is you having problems after you get in your home. You want to enjoy your home. You don't want to be house poor. And when we say that, what we mean is you get into the home, you can barely get in, barely afford it, right? Or you get in and then you're always stressed out because you can't afford all these other little costs that it takes to upkeep. So we want to make sure that you either maybe purchase below where your max is, right? So then you have some wiggle room, or you prepare and you plan ahead of time for these unexpected costs. Let's see. The real threats in 2026, especially in the Southeast region of the United States, I wrote this down: insurance, maintenance, taxes, and inflation, right? Those are the things that are real. especially in, like I said, the southeastern part of the United States, coastal areas, insurance has been a beast. Talked a little bit about this last time because of the weather, but insurance has been really difficult. I don't know what the solution is. I have some ideas, but we won't get into that tonight. But we definitely need to solve it. And insurance has been a beast. And so we have to figure that out. But you don't want to go broke buying the house. You go broke owning it without a plan, like I talked about. So insurance costs are definitely out of control. Insurance premiums in Florida are up 2 to 4 times than other markets. We are like, in some ways, Florida part 2. It hasn't really gotten much better in the past couple of years. It's still just as tough. Carriers exiting states or tightening underwriting, that is a big cause of higher costs in insurance. Wind, hail, flood, named storm deductibles are rising everywhere. This pressure is moving north. South and North Carolina both are feeling those effects. So it's not just Florida, it's working its way up the coast. And so you just need to be prepared for the insurance costs. So one way to do that is to ask your real estate agent, ask your lender to make sure that you're saying, hey, what will my insurance be? Are there any assessments? What is the HOA fee? What do I get for the HOA? All of this stuff can be uncovered. So we want to make sure that we understand exactly what we're getting into. Again, make sure you put down below where you are from and in what questions you have. I'd love to know down below. So keep me posted and let me know. And let's see here. Let me get back into this here. So, okay. Deep dive on maintenance costs. Before we go there, let's go to alternative estimates. So some reports do show average homeowners spending over $21,000 a year in non-mortgage expenses. And that's including the insurance, taxes, utilities, maintenance, and other costs. And that's through an insurance company called Insurify. But that means a homeowner might be paying as much or more in hidden costs than they are comfortable with. And that's why budgeting beyond the mortgage is critical. Monthly ownership burden. In 2024, the median monthly cost for owners with a mortgage was about $2,035, including everything from mortgage to utilities. That's from census.gov. Okay. Now, in context for 2026, so 2024, the monthly median cost for owners with a mortgage was about $2,035. In 2026, with inflation still present in maintenance and insurance costs, that median is unlikely to come down. So many homeowners in 2026 will still be managing $2,000 plus in monthly carrying costs. So not expected to change too much. All right. Let's talk about, though, what these maintenance costs are. So you could have roof repairs, HVAC servicing, termite preventative treatments. We have termite here down south. The further south you get, the more the insects start to become an issue, right? Siding, painting. We have hardy plank on our home. And while I like hardy plank, the problem is, or the challenge is, every 10 years you have to repaint it. Okay. So the only way to really avoid that is if you have brick that isn't painted. Even painted brick would probably be better than hardy plank, but brick, or you could have vinyl siding. Then you have other issues with vinyl siding sometimes, and it's not as nice of a look in some cases, depending on what you're looking for. But the hardy plank needs repainted, right? Shingles only last so long, 15, 20, 30-year shingles, right? So you could have a standing seam metal roof, but that doesn't last as long. So everything on a home starts to wear down, which is why you can claim depreciation on property. But you have certain things on a home that deteriorate over time. And so those become a maintenance. And we keep this rule where we try to do one thing a year so that they don't build up. Because what I find is when people come to us and they say, hey, we want to sell our home, what happens is it's been 10 years or 15 years and they haven't done anything every year, and it just compounds. And it's all this major stuff that has to be done just to get the home up to par based on what everybody else's standards are at the current time. So down here in coastal markets in the Southeast, including Myrtle Beach, the salt air and the humidity equal faster wear and tear. So you're going to have that as you come down. Well, just up north, like you have snow and you have some other stuff that might beat up your home. Here, it's the salt air and the humidity. So, for example, you might have AC units that might need earlier replacement than homes that are inland or may not have the salt air. Maintenance accounts for the largest slice, though, of hidden costs nationally. It's about $11,000 a year is what I'm finding total for the, on average. That could change based on the type of home you have or what things go wrong. But HVAC, what I did was I kind of took an idea of what these things on average could cost. This isn't specific. It could be different. It could be higher or lower, but just to give you a range, HVAC tune-ups, you're looking at roughly 150 to 300. Roof inspection repairs, that could be, the range is humongous, but 300 to 1,500. This is on average items to budget for. So if you're creating a budget for your home, these are numbers you should put aside for these things just to be safe. Exterior paint touch-ups, 1,000 to 4,000. Plumbing and electrical, 500 to 2,000. Yard and landscaping. You get a home, you have a lawn to cut. You have shrubs. I'll tell you something here in the Southeast. Let's talk about Myrtle Beach and the Southeast. I have never seen weeds grow like they grow here in Myrtle Beach, and you have to maintain that. And down here, what I find is that nobody wants to actually pick the weeds. They want to spray them. So if you have weeds, most weed companies aren't going to go around and pull every single little weed. They're going to spray them. But you need a weed company, or you're going to be out there spending hours every weekend edging, cutting, maybe mulching, and pulling weeds, trimming shrubs, and landscaping goes on longer here because the weather's better, right? So, but it's a great business because it's almost year round. Pest control, 200 to 600. Like I said, we have termites, palmetto bugs, and every other bug you can think of. But honestly, we've always had a pest control company. Some people that I know do it themselves. I'm not saying it's good or bad. I don't like it. I think there's a much better job when it's consistent. We have a pest control company that comes out, and we very rarely see bugs, but you do need some sort of pest control on your home. And so that's another added cost. We had a client in Myrtle Beach whose AC compressor went out midsummer, unexpected $2,800 cost. We planned for it next year and avoided a crisis. So you have to think about, you always budget 1% to 3% of your home's value a year for maintenance. Now, that's just a rule of thumb. That doesn't mean that's the exact cost, but put something aside every year to make sure that you have those expenses. We have had to, and we had a home we built in 2019 into February 2020, I think. And, thinking back on what we've had to deal with, HVAC units having issues. We have a service company that comes out and looks at our HVAC units. That there's always something. Now, I know you could make a case and say there's nothing that needs done. You could do it yourself. But, having that servicing contract always makes sure that we're ahead of the game and it's clean and we're taking as good a care as we can of our units. But we've had water leaks where we built our home. You would have never known inside of our kitchen island, there was a line that had a pin, a finish nail through the trim into the tube of the plumbing line. And it was just like a drip, drip, drip until finally it popped out 4 years later and the water ran out in the island. And so all of our hardwood had to be replaced. And that was coming home from a vacation. That's the kind of stuff that happens. And that's when it happens. It never happens when you expect it. So you have to budget for these things because they will happen. It's not a if it will happen, it's a when. So you have to be prepared and you have to have a little money set aside. But you have to think about these things because if you just barely get in and then you don't have any extra money to put aside, as luck would have it, it's that event is coming. So you want to make sure. I wrote down some other things that have happened to us. Besides the HVAC maintenance, we've had hot water tanks that needed drained because they weren't set up correctly. We had animals. We had a palm tree. So this is a perfect example. We had a palm tree that was too close to our home. So what happened was an animal got up on the palm tree, jumped onto the roof because it was right there. And then they got up into the attic of the home. And so we had to have the animal taken out. So I think it was a squirrel or something like that. But the point is, this is the stuff that happens. And this is over years and years and years of homeownership, but there's always going to be something. What I have realized is there is never a year where there isn't something. So there's always going to be something to do on the home, whether it's, if you have the garage floor coated or you have your porch coated, eventually that's going to need recoated. You got to paint the trim, power wash the home, whatever it is, there's always something. So you just have to be prepared. And this is just homeownership. This isn't a knock on homeownership. This is homeownership. And we'll talk about the benefits because I believe, in my own personal opinion, they outweigh the maintenance that you have to do on a home, but everybody's got their opinion. So you have to have a reserve fund, air filters, and I didn't talk about smoke detectors and batteries, which we just did. I decided to go around the home and replace all the batteries, which is not a large expense. It's a little bit of time. It was a little bit of a pain this year, but for the most part, that's another thing you have to do. You got to go out, you got to buy 9-volt batteries, and you got to replace them. I think we have 11 smoke detectors and carbon monoxide detectors in our home, but you got to do that stuff. You got to replace the air filters. If you don't, then it affects your HVAC unit. If your HVAC unit is affected, it already is a lower lifespan here in the coast than it does a lot of places anyway. So now you're just hurting your HVAC unit. So it costs some money for the maintenance, but it's worth it. Let's talk a little bit about insurance costs. So home insurance is an often underestimated cost, I would say. In coastal zones like where we are here in the Southeast, we typically pay more due to wind and hurricane exposure. Now, I don't know what it's like in the middle of the country where they might have tornadoes or earthquakes out west or whatever it is. I just know that we do pay more than most because of those circumstances that we have here. So national stat though, homeowners insurance is about $2,000 a year. And that's part of the hidden cost mix, and insurance rates have surged faster than incomes. And there's been plenty of reports on that. Coastal flood and wind risk, especially near the oceanfront or the intercoastal waterway, that means insurance premiums can be higher than going inland. We live near the water. We're on water, but we also live near a major intercoastal waterway here. And the ocean is just, I don't know, couple miles, not even a couple miles, the other way. And that brings with it a lot of other concern. Insurance companies look at that, and we have properties that are investment properties on the ocean. And so they look at that and they say, hey, okay, what's the likelihood that this floods or that you get hail damage or that you get wind damage or any of that could be, and that's what the insurance comes down to. So the closer you want to be to water or any of these these so-called maybe problems, you have to be prepared for that, and you're going to pay a little more. Insurance here, I think it was a year or 2 years ago, doubled or tripled. I mean, our homeowners insurance, all of our flood, everything went up. It was ridiculous. So that happened a couple years ago, and then it's been pretty close ever since. So you can shop, and you should shop every single year. You should shop auto insurance. You should shop all your insurance every single year, just to make sure that what you're getting is the right amount. But the costs are there, and you definitely need to have it. Now, out here, some newer homes may benefit from building codes that are, over and above what the older homes have done. So we have fortified standards here, and you usually get a lower rate. So if you have that, a lot of places on the coast do. But, a tip for 2026 builders and buyers, consider risk mitigation features. So whether it's high impact windows, elevated electrical, the fortified standards, they may reduce insurance on your home over time. So those are some things to consider. And then those are things that I would consider as well. And I would tell you to consider. We had a client, speaking of the insurance, we had someone that we recommended get flood insurance. This is a cost that you need to consider. And let me make another point on extra costs that aren't planned on your home. If you aren't able to put some of this money aside, then that's a sign that it may not be your time to purchase a home. Maybe you shouldn't purchase a home, because let me tell you the extreme end of it on the negative side. We had someone that purchased a home. We recommended, even though they weren't in a flood zone, they get flood insurance. They either weren't in a flood zone, we recommended it, or they were, and they decided to risk it and not get it. They didn't have the money to pay for it. We still recommended it. We always do. And wouldn't you know it, they got flooded. And it wasn't an area that we thought would. It was just part of the neighborhood did flood and some parts didn't. And we recommended they do. But they didn't get flood insurance. They took the gamble because they didn't have the money. And then they lost the home. And that's the extreme negative side. You don't want people to lose their home, but that's what could happen. So if you can't keep up with maintenance or you can't keep up with, let's say, taxes, you could get a tax lien on your home. Someone could put a lien on your home for the fact that you haven't paid taxes, and they could end up getting your home for just to make you current with taxes. So you have to make sure that you can afford to keep the home that you're getting. So don't spend all your money to get the home and then not be able to afford to keep it. So that's what we're really trying to prevent here. Okay. And if you need to work these numbers, call us. We'll work these numbers with you. If you're not sure and you're like, man, I really just don't know, give us a call. We'll be glad to help you with this. I would much rather spend time helping you understand the numbers than you getting into a situation where you can't get out of or you can't afford the home you're in, because that's a stressful position. And I don't want anyone to be in that position personally. Okay. So, let's talk a little bit about property taxes. So property taxes as an average, $3,000 a year, that's on the national data. Okay. So about $3,000 a year, a hair over. Horry County's property taxes, though, can vary widely, and they're often lower than many major markets. Property taxes here are usually much lower than in most other markets. So that's something to consider as a plus when moving to Horry County. An example range could be anywhere from $764 at the low end or in the 700s to $3,900 at the high end, depending on the price of the home, right? Often it's below the national median though. But why does this matter? And that's because property taxes are a recurring cost. So in case you're not aware, property taxes are something you pay on the regular basis. Now, there is legislation being talked about in some states where they're trying to eliminate property taxes. But it's a recurring cost that must be factored into your home ownership budget from day one. So you have to say, okay, this is what it's going to cost me every year to own my home. What are the taxes going to be for my home? And depending on where you live, it could be, my parents used to live up in the Midwest. They paid $11,000 a year, or you could live here in South Carolina in Horry County and pay $1,000. That's a $10,000 swing, folks. So definitely where you live matters. So don't get that confused. Where you live matters, and it can vary widely depending on where you are in the country. But that's not the only cost to consider. It's just one of them. So there's other costs where you might be paying a lot more money for something else, and then maybe higher here in South Carolina and lower somewhere else. But in general, property taxes here are generally much lower than a lot of other areas in the country. Okay, so let's talk utilities, HOA fees, and other expenses. So utilities would be like plumbing, electricity, internet, TV, water, trash. Those are all ongoing costs usually. Now, some might be included in your HOA, but you're going to pay that as an ongoing cost too, or it's not in your HOA and lumped together and you have to pay it separately. But many coastal communities have HOA fees that cover amenities or maintenance, but that's another recurring cost. Some studies show utilities and services dramatically raise the real cost of homeownership, sometimes beyond just mortgage and property tax and insurance. So you have to be able to navigate that. And this is where I came down to talking about assessments. That's a real scenario when you have a second property, even a primary residence, but a lot of times it's the second. The assessments can be high. They're dealing with this in Florida right now. There are a lot of assessments, a lot of oceanfront condo buildings. A lot of people will buy condos on the coast here, on the coast in Florida. And what happens is the buildings get behind on maintenance. We call that deferred maintenance. They haven't done what they need to do to keep the building up to standards, up to not code, sometimes code, but not always. They need to keep doing things to make sure that the properties look good. Just like when you own a home and you have to, paint the house every 10 years, replace the roof every 30, big buildings have to do that too. And if they don't make little things here and there, they get behind, and now it's a huge expense. And what they have to do is they have to do an assessment, and they're going to charge everybody that lives in that condo building. And now everybody's got this big bill they have to pay. They can do it quarterly, monthly, one time. It goes different ways. So these are things that have to get done. So you have to think about assessments. We are always stressing to people that have to buy condos here in Myrtle Beach, call us. We do both oceanfront and non-oceanfront. We do single family homes and oceanfront properties. They're two different beasts. And especially when you're doing condos, there are so many factors to consider. You have to make sure you don't make a wrong decision. It can be very, very costly. Okay. So let's talk a little bit about Myrtle Beach specific context. So the cost of living and affordability. Myrtle Beach cost of living is about 7 to 8% below the national average, and housing is about 29 to 30% cheaper. Now, that's on average. That's a doesn't mean it's an exact thing, but that's on average. So, while hidden costs exist, Myrtle Beach remains relatively affordable, but you still have to plan, and it's still going to be costly to own a home, and you have to be prepared for that. So I want to talk a little bit though about a buyer that we had that budgeted perfectly. And after 12 months, they realized that maintenance and insurance added significant monthly expenses. So they didn't realize that even though they budgeted perfectly, they were like, hey, we've got everything knocked out, how much it would impact. And it always sneaks up on everybody, no matter if we tell them or not. Most of the time they're pretty prepared, but some people, they're like, hey, we've got it all budgeted. Here's our numbers, da, 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 da. And then they're like, oh my gosh, we have to pay for that too. And that too. And yes, you do. Now, one of the big benefits about being in Myrtle Beach, guess what we don't have to pay for? I should knock on wood. Actually, I wouldn't mind some right now. We don't have to take care of snow removal. We don't have that problem here. Some of you do, which is why you may want to consider being here in Myrtle Beach. Although I do like snow, we can go to the mountains for it, so we don't have to worry about it here. I'm just joking with you guys up north. We love you. So, at the end of the day, you have to create realistic cash flow models. That's what I like to say. Realistic cash flow models. And, you have to be prepared for the costs, and all you can do is have a plan. May not be perfect, but having a plan. So let's talk about some rules of thumb that we can use for our planning and budgeting when it comes to home ownership. So 1 to 3% of the home's value annually for maintenance. Doesn't have to be exact, guys, but you definitely want to have some amount that you're putting aside. If it's not 1 to 3, put what you can, but you should have some money because that rainy day is coming. So, okay. You want to add homeowners insurance and property tax into your monthly projection. That's the best way to do it. Add those costs, the insurance and the property tax, so that you know worst case scenario or as close to worst case scenario as possible. Set aside a contingency fund for emergency repairs, which has to do with a little bit with that 1 to 3% budget. I can't stress this one enough because this is really important. Every time you think you've got nothing to do that year and you're like, wow, we just updated this. We just took care of that. We just did this. And this is where some people will get you because those that are on the other side of the fence, like you shouldn't buy a home, you should rent. I'm not saying that isn't the case. Everybody's situation is different. Some of you may need to rent. Some of you should buy. Buying is about the long term. If you're trying to time the market, there's a saying, it's not timing the market, it's time in the market. That's what we say. So don't buy and try and time the market and be like, oh, if I buy now, I might be able to make XYZ on my property in the next 2 years. Real estate's a long-term game. So it doesn't matter what you're buying. If you stay in the market long enough, you're going to do just fine. So that's the game you're playing. And so you have to have a contingency plan and you always have to have reserves. Okay. I would say also consider replacing older components before they fail. This is why we are big on, making sure that we have our HVAC units checked, right? Once in a while or whatever it is, because those things hit at the worst time and you can probably extend the life if you take good care, just like anything else. It's like your car. If you don't treat your car well, it's probably not going to last as long, right? The battery, the engine, the whatever. It's the same thing with a home. It's no different. So are you taking care of your home? Are you making regular updates or not? Okay. Insurance, example budget worksheet. I have example costs here, but I mean, they're subjective. So, and it depends on the area. Mortgage, I think this is all talking about, Horry County, but on average, these are averages. Mortgage 1,800, maintenance 900, insurance 170, property tax 250, utilities 300, HOA 150. So for a total monthly budget of 3,570, your millage rate will vary because that is one way that we calculate here. But this points to true expense beyond just your loan payment. So you have to consider that. Don't really pay so much attention to the numbers, just to get an idea though of what you actually would have to pay for. So, I told you a little bit about some other stories that I had. We had a client who bought a home last year and had an expected mortgage and an HOA. They didn't plan for equipment replacement like HVAC, which hit unexpectedly. This can happen. You might go to buy a home and you might do a home inspection, but what's going to happen is nobody can guarantee how long that HVAC system is going to continue. You can just take a kind of an idea. So let's just say that the HVAC unit is 7 years old, but it's a little bit rough. The inspector has no idea when exactly, what day it's going to go out. So you have to decide, is that something you want to request to get fixed, or can you not? And when will it be? And so if you have an older HVAC unit, you have to have that money aside. And I've seen it where day of closing or day after, 2 units go out, 1 unit goes out, and now you have to pay for that. And that's how it always goes. Like I said, you can never plan perfectly for it. So you just have to be prepared as possible. Okay. Yeah. We had another person that purchased with us in Carolina Forest who structured savings for maintenance ahead of time, had peace of mind, even during storm season. So again, they actually took our advice. I say actually, but they took our advice like most of our clients do. We have great clients. They took our advice and then they didn't have to stress through storm season because they did the things that we recommended and they had some extra money set aside for anything they needed to worry about. And, we also get a lot of retirees here and they think the insurance will be low but the premiums rise, right? And so planning ahead mitigates that pain. And so it doesn't really matter whether it's insurance, whether it's maintenance costs on your home, planning ahead matters. Okay. So let's review and what we talked about. So hidden costs are real and they can be substantial. Don't fall into the trap of only budgeting your mortgage. Add the taxes, add the insurance to it, which most likely your lender will do for you anyway. And you will know this stuff when you go to closing, but always make sure you're asking these questions ahead of time. It's something that's important. Planning and being proactive protects your investment and your lifestyle. So make sure that you have these costs covered. Okay. So listen, if you're planning to buy, build, or budget for owning a home in 2026, let's run the numbers together. If you have questions, reach out to us. Our information's at the bottom. And we help people model real ownership costs all the time. That's our job. That's what we do. We help them understand risks and we help them plan for a strong financial future. That's what this is all about, right? So, and remember, the average US homeowner spends roughly $16,000 a year on maintenance, insurance, and property taxes, which is about $1,300 a month beyond their mortgage. Okay. The median US homeowner, the cost is about $2,000 a month. Maintenance alone can be nearly $11,000 a year. And in some markets, hidden costs can exceed $21,000 a year, including other non-mortgage categories. And these are all referenced from good sources. So, and I can speak personally for us on what we've dealt with. So it always happens. It may not be large this year. It may all happen in 1 year, which is what it seems to happen, I swear, anymore, but you're always going to have something, right? So if you have any questions, ask questions about specific scenarios. If you're watching this video later, then reach out, ask the questions that you have about costs or what you might run into here in Myrtle Beach or in Horry County, or even in the state of South Carolina, if we can help you. And we'll be glad to answer any questions you have, but you can always reach out to us. All the comments will be in the video if you see this later and you're not seeing it live. I also wanted to say that I am interested in doing our next live, it probably won't be the next Thursday is Christmas. And then the next Christmas or the next Thursday after that is New Year's Day. So I'm not sure if we're going to do a live until the next week after that. But when we do it, what I'm going to do is I'm going to do the benefits of homeownership, because we've talked about the costs and all the things you have to be aware of. I'm not trying to scare you from buying a home. We do want you to have the real, raw, unfiltered version. We want you to know exactly what these costs are. So we're being honest with you, and all those costs and the stories that I told you are real stories, and they're all real costs that you will have to worry about when you purchase a home. So until next time, if you have any questions, reach out to us. Thanks for watching, everybody. And we will catch you on the next live. Everybody have a great Christmas. Have a great New Year. Can't wait to see you next time.